if you're interested in buying commercial real estate assets, you really need to fully commit to the entire process and becoming great at it all. And at the core, this is just doing deals. So you have to be good at negotiating. You have to be good at selling. You have to be good at building relationships. You have to be good at knowing where you need to be in negotiations. That's the underwriting portion. Then you have to be good at knowing how to negotiate with people, right? You have to be good at having these conversations. You have to be good at knowing that they're at, 20 million. You need them to be at 16 million and figuring out how to close that gap there to be able to get a deal done. Hello and welcome to another episode of the Real Entrepreneur Podcast. My name is Alex Coffman. Thank you guys for joining, tuning in. We're wrapping up. Today's Friday. We're wrapping up the boot camp that we put on this week. Good one. We take people all the way through finding a deal, underwriting a deal, negotiating a deal, and making an offer. And it's been an action-packed 4 days. And this is kind of what I want to talk to y'all about today with commercial real estate investing. We talk to a lot of people, and a lot of people reach out who are interested in jumping into commercial. And a lot of times it can seem, overwhelming. They really don't know where to start. And a lot of times people just send us an address and they, say, hey, I found this deal. It's just a listing. But there's a lot of intricacies that are involved with finding the deal, underwriting it correctly, negotiating it based on your underwriting and where you need to be. And then after you even get the deal and you get your offer accepted, seeing that deal all the way through. And so I want to try and simplify it a little bit for you guys today and talk about a few things with that. But commercial real estate investing is simply just a business. All right. So you're buying a business. This business produces incoming cash flow. You're likely going to have debt on this business, right? You're going to get a loan. But the best part about it is that this business is not, made up. You've got a real asset. You can go out there, you can touch it. People are going to be renting the units from you, whether it is industrial, retail, multifamily, RV parks, mobile home parks. They're going to be renting out these spaces from you. And if you go about buying in the right place and buying the right thing, you shouldn't have any issues renting out this property. Even some of the worst properties and the worst locations still have tenants in it. So it's a very safe investment so long as you approach it the right way and do it the right way. Now, there's a few things that you're going to need, right? Like I was speaking to somebody last Friday, and they sent me a deal that, is like $24 million, okay? It's 125 units in Atlanta. Now, with this deal, in order to actually take down this deal, number one, they would need to qualify for the debt, which would be substantial. This specific instance, they were going to be looking at assuming the debt that's already in place on the deal with a good interest rate, something around like $9 million. So that means that they would need to bring $15 million to closing just for the down payment, the delta between the purchase price and the loan. Now, the loan, right? So they need a few things. Number one, they don't know if it's a good deal. They haven't run the numbers. They haven't seen if it'll cash flow. They haven't seen, what the opportunity is. They haven't seen if they're buying it below, at, or above market value. They really don't know. They just found an address, right? And they're looking to get started investing in real estate. And I think that a lot of people find themselves here where they get excited. They want to start investing in commercial real estate. Maybe they haven't invested in real estate at all before. And then they just start looking for things, right? Or they see things that are listed and they find an address. It looks like a good property, beautiful property, good location. But then they have no idea what to do next. And so this is where the commitment to your craft comes into play, right? Like if you really want to do this at a high level and do this for a long time and really achieve financial freedom through real estate investing, then you really need to fully commit to learning this craft and setting everything up. This is a business. If you're going to be the active real estate investor, this is not something you're going to do passively. You have to fully set up a business to support what you're looking to do, right? We talked about it 2 episodes ago. You're going to need, accounting and admin. You're going to need acquisitions. You're going to need investor relations. You're going to need somebody who's going out there chasing leads. You're going to need to build relationships with brokers. You're going to need people who can sign on the debt, property managers, lenders, etc. You're going to need to build this full team to be able to support doing these deals. You can do that by partnering with people. You can do that by slowly building it out. But you need to fully commit to setting this up, right? You can't just go out, find an address, and expect to get a deal done. And I was talking to our partner Robert about this the other day. Even though you might be good at running numbers, which I'm not discounting anybody who's good at running numbers, but it's just a math formula, right? Like we all learned this stuff in middle school, high school. It's multiplication, addition, subtraction, and division. Okay. It's nothing, extraordinary. So long as you know the formula and you can plug the numbers into the formula, that formula will spit out an answer, and that answer is underwriting. Okay. So, just because you might be good at underwriting does not mean that you're good at real estate investing. Anybody who can plug a number into a formula is technically good at underwriting. And there's way more to real estate investing than just being able to plug numbers into a formula, right? You need all those things that I was talking about. And even if you're able to get the deals and then underwrite the deals by just plugging numbers into a formula, then you really need the skills to be able to get that deal done. And just because you're good at underwriting does not mean you have the skills to be able to negotiate the deal and see it all the way through. And so there's a lot more that's involved with real estate investing than just running the numbers or being able to find an address. And so if you're interested in buying commercial real estate assets, you really need to fully commit to the entire process and becoming great at it all. And at the core, this is just doing deals, okay? So you have to be good at negotiating. You have to be good at selling. You have to be good at building relationships. You have to be good at knowing where you need to be in negotiations. That's the underwriting portion. Then you have to be good at knowing how to negotiate with people, right? You have to be good at having these conversations. You have to be good at knowing that they're at, 20 million. You need them to be at 16 million and figuring out how to close that gap there to be able to get a deal done. And the way that you do it is not just saying my offer is 16 million. You really have to finesse the situation. You have to negotiate it. You have to get in there and work it to be able to get it to where you need it to be. Then after you do that, you have to follow the rest of the steps of raising the capital, putting it together, getting the loan, overseeing it, the management, the asset management. And so it's quite a lot of steps that you really need to learn and fully commit to mastering. Now, you may not master them all, but you need to be fully committed to assembling the team of people who can master this whole process together with you. And that's how you build a long-lasting and profitable real estate investment business, is by fully committing to the process. So if you're not there yet, I would urge you to consider really taking this seriously and going all in on mastering each specific part of the process of investing in real estate and building this team and building an actual business that's going to provide for you. Now, and you don't have to start with, a $25 million property. If you're interested in getting into multifamily, I would say that you probably should start on the lower end there, unless you have other people and you have this team built out already, right? You're not going to start out by going and buying $200 million, 450 unit apartment complex in, the best location, right? Maybe you should look at buying a 32 unit. I would suggest you actually start between like a 32 and a 50 unit and try and not go below that. The reason being is, so with commercial multifamily, anything 5+ units is considered commercial. Now, just because it's considered commercial doesn't mean that it's a good asset. A 5 unit, I would not buy. An 8 unit, I would not buy. An 18 unit, I would not buy. A 22 unit, I would not buy. I would try and start at about a 32 unit. And I'm only telling you this from experience because I have an 8 unit. We have a 6 unit. We have a 17 unit. and these properties do not cash flow. It's very hard to make those deals profitable. Now, they won't lose money, most likely, like they would if they were a fourplex, for example, but it's not going to make money, and it's really not going to set you apart and put you in a position where you're actually experiencing the true benefits of real estate investing. Now, I'll show you the scale here, and this is one way that this is one of the biggest benefits to buying commercial multifamily or any other commercial property is when you raise the net operating income, you raise the value of the property, right? I was talking to someone about this the other day. It's going to be impossible for you to make $1 million on a single family house. All right. It's very possible to make $1 million on a commercial property very fast within 12 months or so. And this is how you do it. You raise the net operating income. All right. The net operating income is the gross revenue, your rents, your other income, minus your operating expenses. Your operating expenses are property management, maintenance and repairs, utilities, salaries, property taxes, insurance, anything else that's involved with operating the property, software, etc. So in a 6-cap market, I'm going to be covering some stuff that might be a little high level if you're not aware of what these terms mean. But if you are unaware of what these terms mean, that just means that you need to dive a little deeper, look it up, take notes of what I'm writing down, and commit to the process of learning this stuff like I was talking about earlier. So in a 6-cap market, to make $1 million, you need to raise the NOI by $60,000, which is $5,000 a month. And the way that I know that is I take $60,000 and I divide it by 0.06, and that gives me $1 million. That's added value. So I need to raise the NOI by $60,000 in a 6-cap market to add $1 million worth of value to my property. So here's the deal. That means $5,000 a month in rent increases that you need to implement in order to add that value. So on a 8-unit property, you need to raise the rents by $625 a month. That's quite a bit. 8-unit properties are not nice properties. 8-unit properties, 8-plexes, they're typically in not nice areas of town. And this applies to anything. You go find me any 8-unit anywhere, and the chances of it being in a bad part of town are very high, right? So if it is in a bad part of town, an 8-unit property, the rents are not going to be $3,000, $5,000 a month. The rents on that are probably going to be less than $1,000. I own an 8-unit in New Braunfels, and our rents there are $925. So in order to raise the rents by $625, which would be, that would be a rent raise of 68%. That would probably take me, I don't know, probably take 10 years to do, if not just a little bit less, right? So to raise the rent $625 on an 8-unit, it'd probably take you about 10 years to make $1 million doing that if you're valuing it based on the NOI. All right, and that's just the rent raise. Your property taxes are also going to increase, so it's going to affect it a little bit differently over that longer time period there. Insurance is likely going to continue to go up, but that's an 8-unit. So it's very unlikely that you're going to make $1 million very fast. All right, let's say it's an 18-unit. All right, so 5,000 divided by 18 is $277 a month. We own a 17-unit in Llano, and the rents there on this property are about like $750. So in order to do that, that'd be a 25% increase on those rents. Now, probably could achieve that over a 3-year period of time, depending on the market, but it's unlikely that you're going to go in and raise the rents 25% immediately on a 18-unit, right? Okay, let's look at a 32-unit. So $5,000 divided by 32. That means you need to raise them $156 a month. Now, that's not extremely unlikely. that is very possible, and you could likely do that within about an 18-month period of time, especially if the property that you're buying, their rents are below market value. All right, good. Now let's look at a 54 unit or 48 unit. Let's do 48. 5,000 divided by 48 units. That's $104. Pretty likely you could raise the rents $104 on a 48 unit. All right, now let's look at a 150 unit. 5,000 divided by 150. It's only $33 a month in rent raise. So as you see, the more units you get, the more scale you get, the easier it is to add value. And if I raise the rents by $100 on the 150 unit, and it was 100% occupied, which is not going to be the case, but for simplicity's sake here, the moment I raise the rents by $100 on a 150 unit, I would be adding over $3 million worth of value in the 6-cap market instantly, just by raising the rents $100. So the higher you go, the bigger the scale is, the easier it is to make money. The smaller you go, the harder it is to cash flow, the harder it is to get good tenants, the harder it is to get good management, the harder it is to get a good loan, and harder it is to make millions of dollars buying the asset. So I would urge you to think bigger, get focused before you go out there and start, you should daydream and you should be thinking about this stuff, but, go out there and fully commit to learning what you need to learn. That way you can actually get this stuff done. Reach out, find partners, build your team, commit to the process, and don't be one of the people who thinks that just because you're good at running a math formula, you understand real estate investing, because that's not the case. And you need to fully commit to the other 98% of what's involved with real estate investing. And a lot of it has zero to do with running a formula, and most of it has everything to do with being able to talk to people, build relationships, and get deals done. If you want me to take you through this process, I would urge you to join our next boot camp. It's going to be next month. You can go there by going to treuniversity.com/1deal. You can also join me next week for a free live training I'm doing on July 18th from 6 p.m. to 8 p.m. Central Standard Time. Just go to treuniversity.com/live training. I'll see you there. I'm going to be teaching you a lot of these concepts. At the boot camp, I literally hold your hand and walk you all the way through setting this stuff up, finding a deal, underwriting a deal, negotiating the deal, making an offer on the deal. And then I'm also going to help you set up for the next steps, which are raising capital and actually getting the deal done. But reach out. If you're interested in investing with us, just go to tr3capital.com. We also have our investor call at the end of this month. You can join that by going to tr3capital.com. But we're looking forward to doing more together. We're looking forward to partnering together. But we need you to fully understand this stuff and start putting some of this stuff together on your own so that we can really help you take it to the next level. But until then, we'll see you next week.